Welcome back to the We Fucking Love Startups podcast. I'm your host, Troy Hammond. And on today's episode, we're chatting with Barnaby Marshall. Barnaby is the partner at Icehouse Ventures, where we're actually doing this podcast right now in Auckland, and is on the board and an investor for a lot of startups in the ecosystem. And I really wanted to get him on. He's had some success with his own startups. He's had success with investing. He's now had a lot of success at Icehouse in their seed and growth funds and what they do for the community. So I wanted to get him on and talk through exactly what's happening in the market right now, what they're looking for, how it's changed, any advice that he can give founders. And we really break down a lot of the early stage fund and the growth fund and what they're doing. We go a little bit deeper into what startups and founders could be doing now and how they're supporting the community. And so it's one to watch if you're looking at investment. It's one to watch if you want to understand what good investments look like and what bad investments look like. And if you just like hearing about what's happening in the ecosystem. And so enjoy.
Kia ora. Thanks for tuning into the We Fucking Love Startups podcast, brought to you by Talent Army.
I've been listening to some of your more recent podcasts, and it's quite interesting how you sail close to the wind on potentially some controversies, but interestingly on things that I think naturally shouldn't be very controversial at all, like speaking your mind and expressing your own views on certain topics of things that, I mean, for the most part, I think 10 years ago probably wouldn't have been controversial topics to really touch on at all.
Yeah.
But, it's interesting, I suppose, like what the hot buttons are now for social issues and where I suppose people are sensitive in certain ways that they might not have been previously. And I mean, maybe that's just like, I think a lot of the stuff's just like a cultural, not mind virus exactly, but in the best sense of the word, these are ideas kind of spread, right?
Yeah.
And people get notions inside of their head that certain things are allowed to be said or not allowed to be said or bad.
It's just social pressure, man. And it is, everyone is just scared of saying the wrong things, and so they just quickly conform to, well, jump on whoever's the loudest voice in the room now, just do what they say. And it's a little bit scary because for someone like me, I figure things out in my mind by talking about them openly and out loud, and by osmosis of working with people and talking with people and having conversations. That's how I really start to accumulate my thoughts and then process them and go forward, where some people write them down or some people research and the likes. I just talk a lot and then I listen a lot. And so if I'm talking about something, I may be completely wrong, but someone might come back to me and say, actually, Troy, have you thought about it like this? And 9 times out of 10, I'll be like, I haven't, and yes, like talk me through this. I need to understand this because this is making more sense to me. And so I'm scared to do that a lot of times, or I have been, and now I'm just like,
Did you write your blog post, the one that you thought was gonna?
I wrote it, and I didn't release it because I felt like when I talked about it was enough. When I talked about it, I was like, you
got some of the ideas out in the open,
yeah. And it really is just be curious, not judgmental. Is what I'm trying to say. Like don't judge people, give them the oxygen to think about things, to talk that out, and then listen to them empathetically and push back. But yeah, man.
Well, I think that's how you get to the best. That's how you get to the best ideas. Is the kind of convergence of two opposing ideas that actually have the oxygen to compete them out, right?
Yeah.
And I mean, like one of my friends, he lives in Wellington. He's one of my best mates from back in the day. He works for a labour union. So like a venture capitalist and a labor unionist kind of walk into a room.
Sounds like a joke, yeah.
Yeah, it sounds like a joke, right? But we have the best time talking about very different social policies.
Yeah.
And like arguing every night on Messenger.
Yeah.
About various tax policies or government policies or whatever.
Yeah.
Coming from very different points of view and philosophies, but both with the same outcome in mind.
Yeah, and because you're doing it from a place of love and respect, right?
And we have really, I actually come around to a lot of ideas which, if you live within the echo chamber of your own bias, you wouldn't necessarily be so amenable toward.
Yeah.
But given that we have that trust and kind of we know we're both coming from a really good place.
Yeah.
Like, I know where he's trying to get to in terms of like whatever social outcomes we're talking about on the day.
Yeah.
And he knows where I'm coming from. And so we can have this really constructive, positive conversation. That's the kind of thing that there's not allowed to be, because you do that on Twitter and it's just like,
You did.
well, it's, you know, all they're just shouting.
Yeah.
It becomes quite.
I sadly don't use Twitter much anymore, and I used to love Twitter so much.
Yeah.
I would say that most of the friends, most of the clients, most of the candidates that I know in my world of business came from Twitter in the early days, you know,
Yeah.
just by people shouting into a void, you know, and everyone like having fun with it and joking and never taking anything too seriously. And occasionally you would ask a serious question and people would help you, and you know, and people would critique you and you didn't care. And so, yeah, I think the pendulum's coming back, man. I think it's coming back to the point where we can all think openly again and not worry about it, and that's the way it should be.
Yeah, totally. And I think these things, like, swings and roundabouts as well, right?
Yeah. And still, like, I think we'll learn. Don't be an asshole, right? You know, don't be super fucking judgmental to people. Be a little bit more inclusive.
Curious.
Yeah, exactly. And so, yeah, man. Hey, so thank you so much for letting us host at Icehouse Ventures too.
No worries.
Yeah, we've really
That's
enjoyed
what the space
it.
is for.
Yeah, it's been good, man. Apart from the one time when we're setting up for the event last night, and they brought every single glass in the world on trolleys,
Right.
you know, through the thing, and we were
Rattling
like,
through
yeah. So if people didn't hear that, and it's a surprise until now, that's
what it was.
Auto magical work of Jono. Thank you,
Okay,
Jono.
yeah.
If they did, blame Barnaby.
Yeah, exactly.
So, but no, well done, man. Thank you. It's been great. And so let's start there, right? So Icehouse and Icehouse Ventures, you work for the Ventures arm.
Yeah. Well, that's also, I mean, like, just to kind of point that out as a starting point, there's two businesses.
Yeah.
One is a company called the Icehouse, which got started in 2001. It's essentially a management program for SMBs in New Zealand.
What does that mean for people that don't know what that means?
Small to medium business. So generally they're working
No, I
with...
mean a management program.
Oh, so management program is upskilling in leadership and management capability for people that have maybe found themselves inside of a family business or been building a business for a number of years, and then all of a sudden they have 30 staff or 100 staff, whatever, and they don't necessarily know how to effectively manage that.
Yeah.
The owner-manager program is the flagship product.
Yeah.
They've sold that for about 20 years, and that's a really successful small business over that side. And it's all about empowering New Zealand entrepreneurs and owners to get the best out of their business and grow sustainably and successfully. Icehouse Ventures was born in about 2004 started off as an angel network.
Yeah.
That grew into one of the largest angel networks in New Zealand by about 2014, 15. And at that time, the CEO now, Robbie, came up with an idea to raise a venture fund.
Yeah.
Just pull together people's capital and start a professional venture firm.
Yeah.
And we did that with something in the order of about 150 LPs or something like that.
Yeah.
Invested into this fund. It was called Tahua.
Yeah. What's an LP for the folks listening?
It's a limited partner, so it's just basically an investor in a private equity fund.
Yeah. So mum and pop at home that have invested a bit of money, or a private investor, etc., is throwing some money in.
Mostly it's high net worth individuals, people that have sold a business, or people that are executives inside of a technology company or another firm that has disposable income to invest in a relatively high risky asset class.
Yeah. What's the average? Can we talk about financials there?
I mean, the average investment per fund is about 80 grand. I think the average investor cash wallet, like cash into our business, is about 200K.
Yeah.
But the average is brought down because we've had a lot of growth in the last couple of years, and the average time to invest again is about 4 years.
Yeah.
But there's a pretty high, we've got quite a high level of continuity within our investor base.
Yeah, looked like happy customers last night too, mate.
Yeah, a few happy customers out there.
Yeah.
And I mean, the good news is that we've really, and that's why I was compelled to come and join the venture ecosystem when I did in 2017, was really there was all the right conditions for there being a really strong growth market.
Yeah.
In high growth technology companies exporting globally from New Zealand.
Yeah. And
we've really benefited from being one of the early folks in that party and the party's going pretty well so far.
Yeah.
Um,
I think it's re-upping again now, man. Like in this market personally, I think we're sort of getting that little reset that's going to help us re-up again for the next time. And we're going to see some strong investments and companies come out of this again.
Yeah, well, I think a lot of the companies that have been funded over the last 3 to 5 years, that maybe even have raised capital in a real strong market of 21, 22, the good companies will still be there. There's a bunch of companies that have maybe raised some money or raised it too high a valuation or whatever that might either go broke or go through some kind of rationalization of their valuation. But if they're a good business in a good market, they'll persist. But I think that more importantly, there's more fund managers now than there ever has been in New Zealand. And then there's just a lot more talent and kind of expertise around building startup companies now here in New Zealand. And I think that's just, I mean, I look at our portfolio and the top 7 companies. So we've got about $700 million of assets under management. 50% of our value in our portfolio is in 7 companies. So that's Halter, Mint, Dawn Aerospace, Crimson Education, Tradify, a couple others. But all of those companies have fingerprints on them from the first cohort of real unicorn outcomes. Lanzatech, Xero, Pushpay, and Rocket Lab. Rocket Lab particularly has been a real breeding ground for great talent and entrepreneurship. I think it's just a culture, you know.
And do you think it's an early culture? Because a lot of the like interns from Rocket Lab now are founders, right? And so do you think it's that day one culture at Rocket Lab that's sort of springing out such good talent?
Yeah, I think there's just like, for me, I think it's a ambition. So like there is a real gritty, massive, unrelenting ambition inside the Rocket Lab DNA.
Sending fucking like rockets from New Zealand, man.
Yeah, well, you gotta have a few screws loose, right? To kind of think that's a good idea.
I love that. Oh yeah, who was it? David Downs, when he was on the podcast, he was like, I had dinner with Peter Beck the other night, and he said, "No, I've always been fascinated him. Why did you set up a rocket company in New Zealand?" And he said, "The sweetest thing he gets, because I've always just liked rockets."
Well, that's it. I mean, I think it's quite a I think that kind of naive optimism and just pursuit of one's passion. Without kind of short-circuiting it with like rationality is such a important, and it should be nurtured, you know, like that. You want to kind of protect that with like, you know, enough doses of realism and like, you know, getting the right foundations around the business to make it grow successfully. So if Peter Beck was at home as a 5-year-old playing with rockets, were you sitting there with Monopoly money? Oh man, I love Monopoly. No, I've kind of been I've been trading in something ever since I was like 6. I've just like I used to love the days at school when we do you do like trading days. You know, when everybody bought something, and it was just the most invigorating day for me of the school year, where you'd come in and like try and sell your wares or try and get the most Monopoly money and throughout the day. And then you could use that at the end of the day to buy other stuff. You know, it's like a trading day. So I don't know. Trading just kind of runs in my veins. How did you get to like venture capitalism? What was like the sort venture capitalism? What was that to be? So my background is I've been an entrepreneur since a young age. I started a company actually selling like subscription underwear when I was about 19. I was a sound engineer before that, so I'd made music. Used to make music for like At Peace, which is like a offshoot of Homebrew. Is it scary that you shit yourself so much that you need to have subscription underwear? Yeah, exactly. No, it was kind of I don't know why. It was, we were in a flat. We were in a flat, and I wanted to figure out a way to pay rent because I was a poor like music kind of bum. I like made beats. Sold a few, did some gigs as like a sound engineer. But I was like, man, it'd be so great if I could pay my rent with like a small business that I had. And so I was like, what's something that everybody needs all the time? And it's like, what's kind of expensive that I could make for cheaper? And I was like, what if I imported, a nice pair of underwear from Alibaba?
Yeah.
and sold it online. I reckon I could do better than farmers.
Yeah.
So that was kind of the genesis of that idea. It was probably a little bit ahead of its time. I think subscription
Underwear as a
essentials
service. Yeah.
came into vogue maybe in the last kind of few years.
Yeah. Well,
Maybe it's out of vogue again, but that was my first little idea. And so we moved into this like shared office space. Me, my current business partner in my new business, who's an old friend, my friend Valentin from who had I Love Ugly at the time.
Yeah.
And then our other friend Nikolai, who was like the kind of tech geek wizard slash everything. As we moved into this office space together, and after about kind of 4 months or so of working together, V and I decided that we wanted to go into business together.
Yeah.
So I sold all my underwear, sold the business online on businessforsale.com for like 10 grand. I think I had like 40 grand or something, and just transferred all that money to I Love Ugly and said, let's go 50-50 on a business together.
Yeah.
And that was the start of my first real.
So you're not here to fuck spiders, man. You're like straight into it, and like from an early age, just gambling almost, right?
Yeah, I suppose so. I mean, gambling, I suppose the biggest gamble is really your time, right?
Yeah.
I think that's how.
When I say gambling, I mean getting yourself out of your comfort zone, right? Pushing yourself and...
Oh, yeah, absolutely. Always want to push myself.
Yeah.
But also, I think we had a real, V and I, were real ambitious, We wanted to make our dent in the universe.
Yeah. What do you mean? What do you define ambition to me, right? Is it monetary? Is it celebrityism?
No, well, I think that was probably, our ambition was a bit more like, a bit more around the fame of a streetwear brand.
Yeah.
We kind of really looked up to like Supreme, New York and Stussy and these brands that have, really become a legacy and like they're a brick in the wall of like streetwear history.
Legacy, right? Too.
And so we wanted to do that essentially. We wrote on a piece of paper that we wanted New Zealand to be famous for 4 things: Lord of the Rings, All Blacks, Karen Walker, and I Love Ugly.
Awesome.
So we kind of like, and then a few years later, like in 2014, because then it was pretty cool. After a couple of years of refining our positioning and brand idea, it really started to resonate, and it had like Joey Badass and Rita Ora, and I don't know. The big one was Justin Bieber came into the store actually when I was living in LA.
Yeah,
my phone's just going. Which was pretty fun. Yeah, he came in with his like entourage and just bought up the store. We charged him full price.
Is it nice?
Yeah. Anyway, that kind of
you didn't have an influencer. What do they call it? Strategy. Get clothes on people for free.
There's a bit of that. I mean, I think we had this stylist reach out to us who was the owner of a store in Chicago, and he had quite a lot of like the hip hop kind of crew come through his store quite often, and we sent him a bunch of gear, and he would kind of place it for us. So, and we had a PR agency in the States for a while and things like that, but it was pretty organic, Like it was people that reached out on Instagram.
That seems to be this strategy now from day one. Like if you look at Instagram and TikTok, people are sending out their product to everyone, trying to get it out there. Like because if a celebrity is wearing it, they can sell so much product so quickly.
Yeah, I think the problem with that is that it's become a real business, right? Like the influencer strategy is not what it used to be, where it was real organic.
Yeah.
Now it's kind of like I've got this many followers, I've got this much engagement, therefore it's worth this per post.
Yeah,
I think it's
a story, not a post. And
it's kind of I don't think it's quite as organic as it used to be, and that's something we really benefited from, like being early in social media. That was the big part of our growth story.
Yeah.
But yeah, so anyway, that's the kind of short version of
how you got here.
Yeah. So and then I got really interested in investing in early stage tech companies.
Yeah.
In about 2014, maybe 15, I used to actually engage with the Icehouse a little bit because a friend of mine had a radio show in BFM, and we used to do a segment on Friday mornings, and I'd come down to the Icehouse and pick up a startup company and take it up to BFM and do an interview.
Awesome.
They're pretty horrific. There's some on SoundCloud.
Yeah? I'm going to have to find some and put them in the show notes.
I'll send you one to put in the show notes. So I'd kind of always been interested in the idea of the scalability and reach that a technology company could have.
Yeah.
And so I came and invested as an angel investor in a company that was based down here called I Measure You, Mark Finch.
I remember I Measure You, yeah.
Yeah. So they were based out of here in like 2015 or something. Came and did my first angel investment, which actually worked out okay. I mean, they got acquired by a company called Vicon. I thought it was a bit hairy there for a little bit. I was like, is this going to work out? Maybe not. Maybe yes. I've figured out now that that's just like
life.
That is life in a startup. You know, there's like this arc that I've drawn for the team a few times. That it's like you have when you first meet a company, you have kind of puppy love.
Yeah.
You kind of fall in love quickly.
Yeah.
And then you go through all the due diligence and maybe things, the kind of shine wears off a little bit, and you get the investment done. And then pretty soon after you go into this like depths of despair kind of phase where everything is like nothing's working, technology's taking longer, sales aren't coming as you expected them to come. And more often than not, then you kind of start to trend out of that. And generally, right before you need more money, everything starts to fall into place. The pressure starts to come on.
Perfect timing.
And technology starts to work. Customers arrive. Partnerships arrive. And then after some amount of time, you get to this kind of unconditional love state where you remember all the things that you invested, or why you invested in the first place.
Yeah. How do you as an investor, not make an emotional investment, or is it always somewhat of an emotional investment?
I mean, so I think about it. There's like themes that you want to be investing in, you know, well, at least that I think about it. There's like certain categories of technology which I have a belief are going to materially impact the world, and maybe even that New Zealand has like a specific advantage in.
Yeah. What are those?
Well, I could rattle them off one by one, but like let's say as an example, the future of food.
Yeah.
Let's say, I mean, it's not like food is going to be. We need a lot more food to feed the world over the next 3-4 decades.
Yeah.
Maybe up to 70% as much calories as what we're currently producing.
Yeah.
For everybody to live with the diet that they want to have. And food as a total category or total industry is responsible for about 30% of greenhouse gases in the world.
Yeah.
It takes up a massive amount of land. There's deforestation that goes on every day for more cattle grazing or dairy farming in parts of South America. It's really destructive to waterways and blah, 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 right? Mm-hmm. So the future of food as a category is going to be different to what we have today. And there's a real range of things that are going to fit within that. So there's indoor farming, and vertical farming. There's cultured products, so like precision fermentation. Mm-hmm. There is technologies of recreating cells or fats and proteins inside of other plants. Mm-hmm. So that's this kind of other type of bioscience. Mm-hmm. And then there's just reconstitution of other plant-based products. And this is kind of all in the alternative protein space. Those are three in the alternative protein space. Then there's a whole bunch of other ways in which we cultivate and grow food and manage horticulture, agriculture that all need technology and improvement. So I think
and it's a good place for New Zealand in particular to do this, right? Because if our agriculture is so strong here, right, that if they're going to be eliminated by technology, why not build like around food and the farming that we have already? And
Fonterra is a massive sales and marketing organization. I mean, they've got this huge distribution network around the world, and they know that there's always going to be dairy. Dairy is going to persist, right? But it's for them to grow as an organization and for New Zealand to grow as a food exporter. We can't sell more of the same stuff. We've got to create more highly scalable export opportunities, whether that's technology or whether that's food that we can produce much more efficiently on a land use basis.
Yeah. Yeah.
So anyway, the question was like, how do you not make emotional decisions? So kind of looping all the way back around to that, I think we kind of start with themes or ideas that we're aligned to at a rational level. And then I think the emotional aspect is really when it comes to the founder in the relationship that you build with the founders.
Yeah.
And that I think can, and I mean, investing at the early stage, it's not all rational. It shouldn't be all rational. It's kind of like, it's art and science.
Yeah.
And it should always be that. Because, I mean, the kind of core ingredients to any startup company is you got to have a vision.
Yeah.
And you got to have a unique perspective, which is on the world, and a counter view, which ends up to be true.
Yeah.
So the old kind of Peter Thiel, it's got to be like, what does he say? It's got to be anti kind of establishment, or it's got to be unorthodox and right.
Mm-hmm.
So you got to have that vision, which is unique and true. You got to have a team that can deliver, and then you got to have the money and the operations those are kind of like the holy trinity of a startup business,
Yeah. I like, for me, I back the person so much when I'm recruiting for them, because we have to, it's almost like an investment for us, right? Like early stage founders who've got zero money and they want us to come in and invoice them. It's scary sometimes. And so I have to back the people and long-term of the people, right?
Yeah.
Yeah.
Yeah, totally.
So similar strategy. Hey, so for people that don't know, like, right, I'd be really surprised for anyone that doesn't, but for people that don't know what a venture studio does or what Icehouse Ventures does, how would you summarize that?
Yeah. So Icehouse Ventures, we're a venture capital business.
Mm-hmm.
So what we do is we have two primary funds. We've got a seed fund, which invests early stage. The last in the series was a $45 million fund.
Yeah.
That invests in pretty early stage opportunities, technology companies. These are like companies with less than 10 people generally.
Yeah.
They are generally they can be pre-revenue.
Yeah.
Sometimes they're post-revenue. But they're early stage companies, right? So we invest up to $2 million per company.
Yeah.
That seed fund is going to be a 30 company portfolio.
Yeah.
And the idea is, as a VC, mostly what we bring is capital.
Yeah.
And then as much as we can, we try and leverage our networks and our own expertise from having invested in lots of companies to guide and shape the delivery of certain set of objectives, milestones, before they get to the next round of venture financing.
Yeah.
And then we've got a growth fund. And the vintage of that was 110 million.
Mm-hmm.
And that invests post Series A. So, the last fund had 30 companies. Average revenue per company is about 8 million or so. So they're pretty established businesses by that stage.
Yeah.
And the idea for us as a capital manager, is to try and concentrate capital down into those that are the best performers.
Yeah.
So that we can get great returns for our investors. And it is as a VC business, our business model is you charge management fees to investors for managing their money, but then you also share in a profit of anything that we deliver in returns in excess of the initial capital, and then a compounding hurdle rate, like a interest rate essentially.
Yeah.
So our whole, the mission of our business is to be transformative investors and transformative companies.
Yeah. So if we break that down, right, so we go to the early stage seed fund, right? So you're investing up to $2 million or $2 million, giving them essentially oxygen to be able to build that product and take it to market.
Yeah.
Has it changed in terms of that pre-revenue and post-revenue thing now in terms of this market?
I'd say for software companies, for sure.
Yeah.
I mean, we're definitely deferring toward post-revenue software companies now.
Is there a definition on post-revenue? Like I get asked this question all the time. Look, we've got 10 customers now, a little bit of revenue coming in.
I think it's kind of like, it's post-revenue be like hundreds of thousands of dollars.
Yeah.
Up to $1 million in revenue. Still really early.
Yeah.
I think that's when that's like, you still haven't figured out the scalable, repeatable business model yet.
Yeah.
you've got evidence that there are some customers that want your product, but there's not necessarily, the market size hasn't necessarily proven out yet, and the core economics are still to be determined.
Yeah, and you need the money for the team to be able to help to get you there, right?
Yeah.
And so,
in this environment, I'd say there's less speculative investing. There's more time for us to do our homework and spend with companies.
Yeah.
Because it's way less frothy than what it was in like 21, 22.
And are they still giving you the same, like in terms of a pitch deck, right, at that level? What are you anticipating on a deck? What are you really looking for? Obviously, because like everyone talks about the hockey stick growth, but a lot of it's just fucking bullshit, right? Like in terms of of course we're all going to be doing that, right? So we might as well just remove that page and talk about what you understand of the market and how you're going to get there. So what are you personally looking at?
I mean, the two main things that I want to know is what are the meta things in the industry that have changed or are the tailwinds for the business, if you know what I mean. So like I think about it as like if you're a swimmer in the ocean, you want to swim with the current, and there are big currents always moving in every market, and so I want to know what for your business and your market, what are the big trends? What are the currents that are going, and how are you on that current? And then second of all, what's your unique perspective that gives you a long-term defensibility in that space? So just to kind of make that a bit more real, like first AML. And the trends are generally like they're either legislative. So there's like a legislative change that's come in, and it's like, okay, now is the time. So before that, there was no business model doing this. Now there is. Technology changes or breakthroughs can be big trends. Cultural change for both consumers and businesses. So like in industry, the biggest change that we've seen is like ESG is now like front of mind of every buying decision for big organizations. And so that's created a big current of how, of startups that can be born and built with the background of that huge trend.
What about the ones though, I get that and it's good. What about the ones that are sitting there thinking, well, I'm building a new category, right? And it's hard to understand. It's hard to educate you what the current potentially is because we believe we're going to create the current with this new category or new platform that we're going to build.
I think there's always like a background story though that would enable and kind of be the preconditions for any new idea to flourish. Because then the other side of it is like, what's your unique perspective on it? So to make it a little more real, first AML, when those guys were starting, their trend was AML legislation. It had just been drafted globally in like 2012. Phase 2 was starting to roll out in New Zealand in like 2018 or whatever. So that was the starting point for them. Their unique perspective was, hey, everybody's building. There was kind of two approaches. One, people are doing it in-house and only using that AML information once for their customer. And then there's a software kind of category emerging for people to manage that process in-house. So I don't know. Those are like the. I didn't explain that very well, but there's kind of two approaches. Right? Their approach was, hey, let's build a service-enabled software company to create one database of all of those AML entities, which was, I wouldn't say it's kind of a good idea. It is an obvious and good idea, but there was enough free space around what was going on in the market for them to be unique. And it was like the timing was really critical. And so,
what is it? Do you think timing plays a massive part in terms of software success? Like,
absolutely. I think timing's got to be like 80% of it.
And the speed that they can produce. Like, what's your take on that? Because we hear the stories, right, of the evil VC firm that gives us all this amazing money that we needed, and then they tell us to grow the fuck up and bring all the revenue in and keep growing and keep scaling and the likes, right? I'm taking the piss. But I guess my question to you is, like, there's been a lot of pressure from VCs in terms of hyperscale over the last sort of 5 years, and now that's changed a little bit. What do people do now in terms of their growth?
Oh, well, I think Yeah. There's some companies in our portfolio that have raised money from the super funds, like the Tigers and the SoftBanks.
Yeah.
And they had that mandate, right? It's like hire as fast as you can,
Yeah.
bring everybody on board. Like,
Yeah.
and it's just a bad idea
Yeah.
because you can't a business can't digest that many people at one time.
Yeah.
Like it's like eating a bowl full of ice cream like in 2 minutes.
Yeah.
You're gonna get a brain freeze. And so yeah, I think it just goes back to like what is rational. There's a speed at which a company can grow. I actually wrote like a little blog post about this. It's called like a boiling point, right?
Mm-hmm.
You can water can only boil at 99 degrees or 100 degrees.
Yeah.
It can't boil any hotter than that. And any more energy that you put, if you turn up the gas, it's not going to boil hotter.
Yeah.
It's going to be the same. And so there's a certain amount of energy that you can put into a business or resources that you can apply to get to that level where you're going as fast as you can. And then beyond that, you start to get less efficient.
Yeah.
And everything just starts getting crapper. And most companies, I think as well, like there's growth. You can actually grow faster sometimes with fewer people for a certain amount of time because there's less people to get on board with a certain set of ideas. You know, it takes time for everybody to come up to speed, understand the mission, really digest and internalize what that means, and then start executing on the plan.
Yeah.
And so, yeah, I mean, I think big VC firms, like global VC firms, have probably messed things up a little bit in some ways and probably gave some bad instructions. But, you know, that happens. You just got to go back to what is rational and what makes sense.
Yeah.
And I think the CEOs know that in their, you know, they know that in their heart of hearts. It's like, hey, actually, we're overloaded here.
Yeah.
We should go back to something a bit more pared back and basic and just do what we need to do right now.
Do you think that gives Kiwi entrepreneurs confidence that, because we were competing against Americans who could throw $100 million at a Series A, right? And just grow the fuck past us really quickly. And no matter what we did over here, there was that threatening worry of like, you know, my little microphone SaaS technology is such a good idea and I've got it here, but if a VC firm gives $100 million to a company in San Francisco tomorrow, they could grow past me in a minute. And so do you think that gives us a bit more confidence over here to go global faster or to dream bigger now that we can?
Yeah, well, I think that idea that capital, more money equals more competitive advantage has kind of been debunked.
Yeah.
Like, I just don't think that's true. And so that's good for New Zealand companies, right? Because we've got less capital as a starting point.
Yeah,
like
it's a way of life.
yeah, exactly, right? Which is a way smaller economy with way less everything, resources. But it's about ideas, really. It's about the quality of the idea, the quality of the execution. And yeah, it's just quality of strategy and just how you get things done.
Yeah.
There's been countless examples of where David has beaten Goliath.
Yeah.
With a more nimble, more creative and higher quality approach to solving the market need.
Yeah.
I think New Zealand companies are as well positioned as ever to take on the world, which is why I'm so excited about what we do every day, because I think we're in a really, really good position. And I think what some of the main stuff is like, New Zealand is pretty well liked around the world, you know, like as a country, like we've got pretty good foreign diplomacy. So you can show up pretty much anywhere in the world and say like, hey, I've got this company. I've got this thing and I'm from New Zealand. And everyone's like, okay, cool. That's familiar and trustworthy.
I read an article Mod wrote. I'm not sure if you saw it on Stuff or something. I can't remember what it was. And he was traveling around South America and he was wearing a t-shirt, New Zealand t-shirt, and he said just the absolute passion people have for New Zealand around the world and all these tiny little villages, and people like the brand New Zealand is known really well and respected and liked universally. I'm an Aussie, right? It's not so much the case for an Aussie. Like we're largely liked, but you know there's some definite cons from being Australian as well.
Yeah.
And New Zealand, and this tiny little country that fucking seems to bat, you know, like on a really big stage, and it's it's for me, I always think, I hear stories of a VC event in San Francisco where Kiwis turn up and they're nervous to talk to anyone and the likes. And I'm like, man, this is like, everyone loves you in New Zealand. Everyone, just go for it. You can't go wrong. And even if you're a little bit awkward, and that's Kiwi ingenuity, awkwardness, and you'll get away with it. And so,
yeah, exactly. No, I think it's I think New Zealand's kind of been bestowed with like the flight of the Conchords, awkwardness, kind of endearingness.
Yeah. Well, I mean, if I'm really honest, right, awkwardness and endearingness in people is a character trait that I don't see a heap. Like I meet lots of really successful, amazing, confident people all the time. And most people that work in startups, right, like these days, it's, super smart people, right? Like they're following a passion and problem, and if you get them talking on their problem, they can go deep and long and, really confident about, what they know. If you ask them other topics, they probably don't know fuck all about it because they've thrown everything into that little field that they're in. But
well, that's what I love about this job, because I'm kind of boundlessly curious as a person, right? So getting to spend time with these individuals, scientists, technologists, creators every day that know so much about some niche in the world.
Yeah.
And some really important, these things aren't unimportant.
Yeah.
They're fundamental to how we live, interact, trade, on Earth in the future.
Yeah.
And so it's like really compelling discussions that you get to have every day and kind of get paid for.
What's your take on the SaaS movement, is over? People are, talking a lot about products now, physical products and food tech and everything. And the interest levels for people getting into SaaS these days seems to be waning a little bit.
Yeah, it's interesting. I mean, I think there's still a lot of room for software to improve lives, whether it be something so trivial as like a business integration problem, or something, I don't know, like a bit more aspirational.
Yeah.
But I think the jury's still out on how much AI is going to impact and change the way that SaaS companies are built and funded. So I don't know. I don't really know enough about it. I haven't thought enough about it. But like, if you think about like HubSpot, just as one example, it's just a big database, and the idea is that you can call information as you need it, whether it be a chart or a table or whatever. And if you just thought, hey, what if we just threw all of our CRM information into just one big database?
Yeah.
And then the future was we just interface with it by asking a question, and it gives me the information that I need. Would that be a
CRM
fair replacement of a CRM like HubSpot that could short circuit all of the challenges of building user experiences and interfaces? That is probably a large part of what makes them successful, I suppose. Like, and I suppose just being like a big platform that's, so I don't know.
Is ChatGPT just going to make us dumber because all we have to do now is pull it open, put it over the top of our database, right? Use it as a CRM and say, who was that Barnaby guy again? What was his number?
I think, the history of advancements and accessibility of information would tell us no. When people probably said the same thing when books were created, that people weren't going to think anymore because they can just read in a book. But maybe at some point that's got to break. That theory's got to break at some point, and maybe this is it.
Yeah. Well,
I think once it's implanted in our brains, and all we need to do is just like, it just can be automatically regurgitated.
Yeah.
That's some next level. That's some next level kind of dumbing down of the human capability.
Well, then we're not strategically thinking at all, right?
Yeah.
We're just reciting.
Yeah, we're just recalling information from the internet.
Yeah. Hey, like that's at the seed level, right? At the growth level of investments, how does it change in this market now?
I I mean, a lot of the same stuff. I think it's, I don't know if you're familiar with like Bill Gurley and Benchmark and
No.
some of those like VCs that have always stayed true to this they've always had small funds.
Yeah.
They've always stayed like really rational around how much spending, getting to profitability. I mean, not that they wouldn't invest ahead of the revenue curve and spend money, but like I think the Bill Gurley approach of VC investing is in vogue.
Yeah.
You know, so
what does it mean as someone who raised 18 months ago, was potentially looking at raising now, had to change everything over the last 6 months into their business to try and get to some sort of, break-even point?
Everybody needs to rethink their plan a little bit and just make sure. The challenge, I think, for many companies is that they raised on revenue multiples, which are really high.
Yeah, and they're trying to get anywhere near break-even is impossible for some of them, right?
Yeah, well, if you raised on like a 30x revenue multiple in 2021, let's say, and the best you're going to do in this next round is a 10x revenue multiple, and let's say you had $3 million of ARR back in 21, you've got to get to, so like, let's call it 90 mil.
Yeah. You
got to get to 9 mil of revenue before your next round, before you'd be at the same, level.
Yeah.
So it can be a real chasm to cross. But having said that, lots of companies raise lots of money. I think, a lot of it's been talked about for quite a while. So I think most of the companies in our portfolio have adjusted really well.
Mm-hmm.
I think overall health of our portfolio looks really fantastic.
Yeah.
Like I don't think there's many companies there that we're particularly like worried about or thinking that's going to be really hard to get to kind of get back to a good level of revenue based on the post money of the last round and be able to raise successfully at the next.
Yeah.
Particularly in the ones that are, mature-ish, like 50 plus people, 5+ million revenue type of thing.
Yeah. And I know walking past Peter's desk a few times, like the data that the insights you've been trying to collect and, feedback to startups is fantastic.
Oh, it's pretty exciting. Yeah. So we've launched this thing, Benchmarks, which is, it's kind of pre-launch, but it's beta version where we're just collecting 4 numbers from all of our portfolio companies every quarter.
Yeah.
Total revenue, total like net cash change, so like total burn or total profitability or how much, number of employees and total cash balance at the end of the period. And from that, we can infer so much insight.
Yeah.
We can give companies like based on all the other companies in our portfolio that are also SaaS companies, how much revenue growth have they had in the past quarter? Yeah. As a percentage and in absolute terms per employee.
Yeah.
So like how efficient is that business per employee? What's the valuation per employee? I think a bunch of like quite useful.
What's your Disneyland metric that you would monitor in each, like in a startup? What's the one metric?
I think that one metric that's probably the most telling is in a SaaS company is probably the burn multiple.
Yeah.
So just like how efficient, it's just how efficient is the growth.
Yeah. And that needs to be like a half now, you reckon? Or
probably 1 is still pretty good.
Yeah.
Yeah. I think like 1, so and by that I mean you've raised for every $1 that has been burned in net, there is $1 of annual recurring revenue.
Yeah.
So yeah, I think 1's still is pretty good. I mean, 2's not too bad if you're growing quite fast.
Mm-hmm.
And anything above that's probably starting to get a little bit dubious. Or just, I mean, the thing is like we've got that chart with all the burn multiples actually on a lot of portfolio companies, and it bounces around like crazy. So like quarter to quarter, and what generally happens is post raise companies get really inefficient.
Yeah.
They just load on a bunch of bodies.
Yeah.
CAC goes up.
Yeah.
Because you're trying a whole bunch of new marketing activities to try and get market share.
Yeah.
And then it trends down over the course of the runway until hopefully by the end of the runway you're back to like really nice metrics.
Interesting.
Yeah.
So and they can see that side by side with clients in your portfolio, I assume.
Well, we haven't actually released it as like a UI on the front end yet. It's all just, I've got like a version that we can look at in the back end.
Yeah.
And so we can we're just starting to collect more information from companies as well.
Yeah,
so we've got a big enough database.
Awesome.
But it's I think it'll be a pretty cool feature set.
Yeah, nice. Did we just out it then? Or
what's that?
Did we just launch it then? Did
we
out it?
That was pretty much. Yeah. That was cat's out of the bag.
Yeah, nice one. Hey, what I'm really one thing I want to say about Icehouse, right? Like, I work with a bunch of VCs across New Zealand and Australia where I can come in and help and plug in as a recruitment person, or they wheel me in to talk to people and help them. Sitting in the Icehouse Ventures, there's a lot of stuff that you guys do that really help the community, and like you're always doing things and events and putting people together and connecting people up. And I think it's good, man. Like, I think like this is something that VCs need to do more of. You know, it's just connecting like-minded startup founders or people that have written their playbook on the next level up, you know, and pass that back down to the next person. And so I think that's a testament to you guys and what you're doing there. And so I wanted to say thank you on behalf of the ecosystem for what I've been witnessing, you know, and been hearing about lately.
Yeah.
And so is that something that's been part of your strategy, or is it just a give back to the community thing? Or?
Oh, it's definitely strategic. I mean, I think Steph, who's kind of head of portfolio services, community aspect of what we do, just went on a trip to the US and brought back a bunch of learnings.
Yeah.
And I think there's a lot more that we could be doing, you know, to really advance that too. But fundamentally, we've got to be, I mean, I think about the role as a VC is you bring capital to the founders, and then you bring any other service that you can to help growth.
Yeah.
And so what are those things that are going to help growth? Some of those things are going to be just having conversations with people that have been through a similar experience, and you can just short circuit learnings.
Yeah.
Just by talking to a CFO, you know, a CFO talking to a CFO about solving a certain problem in their business could just, you know, save hours or days or weeks or whatever, or even just like change a mindset, right?
Yeah.
Because that can be super powerful. Yeah, we're really focused on how we can materially add value. And I mean, the thing is like, you got to be careful as well that we don't do things that are just, because the balance to strike is not drawing too much time from founders, because there's always this event to go to and that thing to spend time on.
Data to put some pride in updates and the likes.
Yeah. So it's got to be like as impactful as we can possibly make it.
Yeah. And
focus on results, which is, I mean, I think we should be measured by like how much we can help these companies, our portfolio companies, to grow by. Yeah. And I think about it as like talent, essentially. You know, if we can help work with you guys to find the right talent for our portfolio companies. Yeah. If we can help on sales. Yeah. Introducing to people within our network, and that's the benefit of having like a big investor base. Yeah. We're not traditional in that we don't have 8 superannuation funds that are our investors. We've got 2,000 executives, ex-founders, current operators in our LP base. So they can all be conduits to sales opportunities and partnerships in many cases. And then capital, right? Like we provide capital, but we need to have a network of follow-on capital and ability to help our companies self-actualize through the right partners globally. Yeah. Awesome. So that's the macro of like how we think about value add, but there's a lot of little whiz bangs and popcorn that we can do. Yeah,
don't get me wrong. Like, if I'm a VC, I'm going to nurse my investments, right, and make sure that I give them the right information they need at all times to carry that investment forward. But I think there's definitely ways that you see people go above and beyond, and it's call it when you see it.
Well, I mean, I think that's the other thing, right? It's like it's a really hard, long journey building a startup company, and so some of the things that we talk about quite a bit is just sharing the journey and celebrating some of the wins along the way. Yeah. Just reflecting on like, if it's a 7-year journey to build or maybe longer, 10 years to build and sell a company, you got to appreciate and take stock along the way and be like, hey, we're actually doing pretty good. We're maybe not at the top of the mountain yet, but we're at base camp. And that's pretty good. Yeah.
Does that journey start before the investment? Like, so I know some other funds will be like, or VCs will be like, yeah, send us your information, start sending it to us a year before you want to come and ask for money, and are you following startups, for a period of time before they come?
Yes, basically is the short answer. Most of the companies that we end up investing in, we've known for a year or 2 years prior. Maybe that's in their previous role. Maybe that's previous business. Maybe we've just tracked that business for a while.
Yeah.
I mean, we do something called First Cut, which is essentially an accelerator program for university students. So that's really about creating, or it's probably more of a give back and creating an education series about what startups are.
Yeah.
And the benefit of starting a startup and how to do it and how it's funded and a whole bunch of stuff around that. So that, I think, creates brand awareness and rapport with, and it also, we meet a lot of those founders as well, and they're like 20, 19, 21. And we've invested in some great founders of that age too. I mean, when we first invested in Craig Piggott, he was like 23 or something like that.
Yeah.
Will Hewitt from Heart Lab was like 19 or something when we first invested in his business. So, I think we try and create that longitudinal kind of relationship.
Yeah. And so someone got wind of me chatting with you on the podcast in Wellington, and so they assured me that I had to ask this question to you. Where's Icehouse's presence in Wellington?
We probably haven't got a much.
Steph does a good job, man. She comes down and does dinners and stuff like that. But
we need a bit more of a constant presence. Yeah, it's something we've been trying to ramp up, I think. Just kind of, and in Christchurch as well, trying to be present in all the regions around the country. Yeah. We do have we've got Elise is based in Christchurch now. I mean, Blenheim's stone's throw.
Yeah.
With Steph.
Yeah, awesome, man. I thought I told them I'd get that up. Hey, man, that's really cool, dude. We, as I said, really thankful of working with you guys. Thankful that you let us sit up here all day and tell people downstairs to be as quiet as possible, for the last 48 hours. So thank you. I'm sort of finishing up this season with the final question, which is not what makes you happy, even though you're probably prepared for that. I'm switching it up now to if you were to give someone a little bit of information, that something that you really enjoyed, whether it be a book or a podcast or a blog or a YouTube video or a TED talk, and that's one thing that you're like, hey, go and check this out, I really enjoyed that, or you might find that useful, and we can pop it in the show notes. What would that be?
Honestly, one of the business books that I've found was one of the most impactful things, and you never know whether it's because of the content or whether it's because of the time that you read it or whatever. Yeah. But it's an old one. It's probably you'd find it in the bargain bin at warehouse, depending on the day of the week, and it's called The Star Business Principle.
Oh, I haven't seen that one.
Yeah, it's pretty old school. It's got a real old cover, but I read that and I found it.
Has it got people doing star hands or something on the cover?
No, it's pretty dry. It's a pretty dry book in many regards. It's like an old Boston Consulting Group kind of.
So is it situation, task, action, result, star principles, or
no? It's the Star Business Principle is there's a quadrant of you got dogs, cash cows, something else, and then a star business. Yeah. And a star business is a market leader in a growing market. Mm. So, and if you're a market leader in a growing market, you're a star business. Got it. Essentially. Yeah. But I found that to be a really useful framing, and there's a whole bunch of context that goes around it. I found it to be a really useful framing just to think about just what's most important. And it comes back to you've got to find a niche to really be successful in, which I think is something that a lot of New Zealand businesses don't actually do super well because we're in a small market. You kind of have to be a jack of all trades.
We don't. We are. We grew up with that, number 8 methodology, right? Just to be a generalist. And so you don't go deep on your sort of niche. And so. Yeah.
And I think that's a real, when you want to be a global business, you have to find something that you're really the expert in the world at. But yeah, I thought that was, I've always found that to be awesome, a really useful framework.
We'll pop that in the show notes, and I'll read it myself. I enjoy reading these books that are recommended. Yeah. For me, the thing about books, right, is you may take one thing from a book that changes your life, and that's the only line in the book that you enjoyed. Or you might get some books that are just phenomenal, and you enjoyed the whole thing, but you don't actually action anything afterwards. And so and I think people should read more, people should discourse more and debate more and do all these things. And yeah, man, thank you so much for coming on, dude. Appreciated it.
Yeah, no, thanks. It's been a good, great chat, and thanks for supporting the brand with the carefully placed hat on the table there.
The perfectly placed hat. It's Jono was like, if we face it that way, it could be a little bit strategically placed. If we pop it just a little bit to the side with the camera angle there, people would be looking at it and it'll be fine. And so
perfect.
That's what we do.
Perfect
Product
positioning.
placement. Hey man, I'll let you get back to it. I know you're a busy guy, so thanks so much for your time.
Awesome, man. Thanks.
Cheers, bud. Thanks so much, Barnaby. That was a really interesting chat. We've had a couple of VCs now on the podcast series. We spent the last 24 hours shooting about 7 podcast episodes. I'm feeling pretty burnt out now. Dan happened to walk up. Dan, this is my business partner, Dan Buchanan from Talent Army. Dan runs Auckland and runs my life most of the time for my advice. And so I thought I'd get Dan on because Dan actually works in the Icehouse Ventures studio here and Talent Army. And so I thought, what better way to summarize all the good things that Barnaby just said by asking you what it's actually like here?
We love it here, eh? Like, I mean, it was there was the option of going into our own office, and then this opportunity came up at moving into the Icehouse, and I think just sort of being part of the ecosystem is what better place to be than in amongst it at the Icehouse, So we love it here. Like, I mean, great space, great to work closely with the Icehouse team. It's good.
Awesome. Yeah, that's pretty much what Barnaby said, right? He's like engage good partners, bring them into the ecosystem and help engage Talent Army. And so, yeah, thanks so much, Icehouse, for having us here. Good to finally get Dan's face on the podcast. He likes to hide behind the scenes and do all the work while I'm the beautiful talent that sits in front of the camera that doesn't have the brains. And so now, yes, you've finally got beauty and brains, and Dan's both of them. Until next time, hey, thanks so much for watching. If you're not subscribing, Dan, what should they do?
Subscribe would be the answer to that.
Yeah, share, subscribe, comment, do all the things to make this podcast get in front of more eyeballs. The reason why we want you to get in front of more eyeballs is because it means that we're able to bring people onto the podcast that haven't necessarily seen this before. And so we're starting to get guests on now that aren't necessarily tech founders. They're just good business founders. Your wife, Liv, actually has been chasing heavily after one particular founder that I won't say that we've got yet because we're in the process of.
Yeah.
But she's been sticking it to us.
She's been hounding, yeah.
And so thanks so much to everyone that's watching. Thanks so much to Dan and Icehouse. And until next time.
This podcast is produced by John Otaka from Empire Films.